Welcome to Alpha Recap, your aftermarkets wrap of the day's biggest stories. We went through the briefs and have a lot to unpack. As always, if you have questions, you can reach us at stockalpha.ai and use the Q&A feature there.
Great to be here. Markets closed for the day, and we've got policy, platforms, and flow volatility to walk through.
All right, quick roadmap. We'll start with that court injunction on visa limits for social media researchers, then talk Netflix and streaming, dig into ETF and single name volume, and finish with some corporate and defense headlines. Sound good?
Perfect. Let's dive in.
First up, the big legal development. A U.S. judge put a hold on the administration's visa limits for social media researchers. That was by far the day's broadest market impact story.
Right. In plain terms, the court paused a rule that would have restricted researchers' ability to come to the U.S. to study social platforms. That pause preserved near-term access to data and talent that big platforms and AI teams rely on.
Which matters because a lot of product work, algorithm tuning, content moderation testing, even some monetization experiments, depends on external academics and private research partners. Cutting that off quickly would have been disruptive.
And analysts flagged that this is not the final word. Appeals or new agency guidance could bring uncertainty back, so market participants treated this as a temporary stay, not a permanent fix.
So what really stands out here is the signaling. Courts are playing a bigger role in how regulatory trajectories affect tech multiples. Even headlines alone can move growth names.
Exactly. We saw that theme elsewhere today. Litigation notices and regulatory denials. So this is part of a larger patchwork of legal activity shaping risk exposure for platforms.
Short reaction.
Big for data access.
Okay, switching gears to media and streaming. Netflix was back in the headlines. The company finished the day down about 20% year to date, and coverage pointed to metrics suggesting re-rating risk.
Yeah, and to unpack that, the write-up emphasized 3 drivers: slower subscriber momentum, margin concerns, and valuation compression. Small shifts in any of those inputs are being retested across sell-side models.
So when analysts tweak growth assumptions by a % or two, it can change the implied multiple pretty quickly for a high-growth, high-beta name like Netflix. I mean, when you step back and look at this, it becomes a sensitivity exercise.
And that feeds into flows. When big growth names wobble, funds often rotate. That rotation can push people into hedges or inverse products, which brings us neatly to the ETF story.
Right. Before we go there, quick reaction to the streaming reset.
Honestly, I was a bit surprised by how fast sentiment repriced.
And the number that really caught our eye. Netflix down about 20% year to date.
Short reaction.
Notable.
Yep.
Now on flows and liquidity. Today was heavy on ETF volume and a few big single name spikes. The headline was the ProShares Bitcoin Strategy Exchange Traded Fund, which fell about 2.7% on very heavy volume, roughly 277 million shares traded. And the fund was trading around $8.44.
That kind of volume suggests either outflows or rebalancing pressure in Bitcoin-linked products. Large ETF volumes can change execution dynamics and put pressure on net asset value mechanics.
Then there was the Direction 3 times inverse small cap exchange traded fund, which rallied about 2.5% on nearly 200 million shares traded. Leveraged and inverse funds amplify moves, both directionally and volatility.
Right. And that kind of activity can be driven by hedging, short-term speculation, or headline-driven position disclosures. When volume concentrates like this, intraday risk goes up.
Single-name volume spikes included New, which traded about 133 million shares, and American Airlines, with roughly 153 million shares traded. Those are outsized figures, and often point to options flows or news hooks.
Elevated volume is a double-edged sword. It improves liquidity in normal times, but it also signals concentrated attention. And when derivatives and leverage are involved, price moves can overshoot on the way down and back up.
Short reaction.
Execution risk was real today.
One practical note for listeners: when ETFs see this level of activity, block trades and creation redemption mechanics can matter. It's not just headline percentages, it's about flow plumbing.
And regulators have been watching concentrated leveraged flow episodes more closely. So sustained heavy volume could draw attention beyond markets, especially if it coincides with reporting thresholds.
All right, next section, corporate catalysts and product launches. There were a few constructive company-level items amid the choppiness.
Jefferies raised its price target on AAR to $112 and reiterated a buy. The thesis was stronger software growth and an extension on a Trax contract. When recurring revenue shows up, analysts reweight models.
And the Testmart launched Horizon, an AI-powered validation platform for Microsoft Dynamics 365. So that's another example of AI being wrapped into enterprise workflows and commercialized. Incremental wins like that can help sales cycles with big software partners.
Also, Prism HR made Time's top work tech list, which is more of a reputational win than a revenue driver in the near term. But reputation can matter in enterprise procurement.
Short reaction.
Small catalysts add up.
On defense, infrastructure and applied research. Tesseract Ventures was selected by the Defense Innovation Unit to advance a prototype called the CADS, a containerized autonomous drone delivery system. Government validation like that can accelerate prototype timelines and open the door to follow-on contracts and subcontracting opportunities.
And in agriculture, new research from the Weed Science Society showed that higher rye seeding reduced weed pressure in organic no-till soybeans. That's slower moving, but it can incrementally shift demand toward cover crop seeds and certain equipment makers over time.
So these are the kinds of discrete catalysts that don't always move broad indices, but can be material for niche suppliers and midcaps.
Exactly. Now on legal and litigation watch. Sportradar received a securities fraud notice inviting affected shareholders to seek lead plaintiff status. Those sorts of filings can create multi-quarter overhangs and volatility.
And Neighbor flagged a denial by the U.S. Fish and Wildlife Service on petitions to list long-tailed macaques under the Endangered Species Act. That eased immediate regulatory pressure for some organizations, but these matters can come back through legal channels.
Investors should treat litigation as an event risk with timing uncertainty. Settlements, motions, and lead plaintiff decisions can influence share price paths over many quarters.
Short reaction.
Legal timelines matter.
Before we wrap, let's pull some thematic threads. Number 1. Elevated volume across ETFs and single names signaled active rebalancing and headline-driven flows. Leverage amplified short-term risk.
Number 2. Policy and court headlines both created reprieves and uncertainty. The Visa injunction preserved data access for now, but appeals could return the issue to the market.
And number 3. Enterprise software and AI productization kept showing up as incremental positive signals. Recurring revenue examples and product launches continue to matter for stock-specific trajectories.
Right. Those are the connective tissue items. Flows, policy headlines, and steady enterprise adoption of AI.
Rapid-fire market briefs. Quick numbers we called out today. Netflix continued its year-to-date decline around 20%. The Bitcoin Strategy Exchange-Traded Fund fell about 2.7% to roughly $8.44 on those heavy volumes. The Direction Inverse Small Cap Exchange-Traded Fund was up about 2.5% on heavy volume. American Airlines was down about 3.8% on outsized volume. New was down modestly but had very high liquidity. And AAR got the Jefferies lift to $112 on the software narrative.
Good summary. For listeners who like to track flow data, the volumes we mentioned, roughly 277 million shares for the Bitcoin product and nearly 200 million for the inverse small cap product, are the kinds of flags that trigger deeper desk-level checks.
All right, what to watch next? First, any appeals or agency guidance after the Visa injunction. A reversal or expanded order would be relevant for tech and research exposure.
Second, Netflix commentary and subscriber metrics. Any fresh updates or analyst revisions could drive further repricing. Third, ETF flow reports and intraday blocks for those large funds. Sustained heavy volume can presage more volatility.
Also, watch Sport Radar litigation filings for lead plaintiff appointments and updates from AAR on tracks or contract confirmations that would validate the recurring revenue thesis. And for the defense story, demo dates or milestone announcements on the CAD's prototype.
Good checklist. Quick reminder, our recap is informational. Analysts note trends and data suggest patterns, but this is not personalized investment advice.
Final takeaways. 1. The Visa injunction bought researchers and platforms time, but legislative or appellate moves could reintroduce uncertainty. 2. Netflix's re-rating is a reminder that small metric shifts can have outsized effects on high-growth names. 3. Concentrated ETF and single-name volume made today riskier for short-term traders, especially where leverage was involved.
And 4. Company-level catalysts. Whether it's recurring revenue, product launches, or government validation, still matter and can create asymmetric opportunities for stock-specific gains or losses.
If you want the full brief, check the write-up at stockalpha.ai. And if you have questions about anything we covered today, head to stockalpha.ai where you can ask us directly through the Q&A feature and we'll answer live. For more market analysis and insights, visit stockalpha.ai.
Thanks for listening. We'll be back after the next market close with more recaps and context.
See you tomorrow. Take care.